Hey everyone, welcome back to Corporate Decoder. Today VIRTUS Equity Trust just filed their semi-annual shareholder report and I am digging into the numbers to see how these funds are really doing. Quick note, this is not financial advice, just my take on public filings for educational purposes. The biggest story here is how these different share classes perform and what the financial tables reveal about their health. So we're looking at a filing from VIRTUS Equity Trust, a big player in the investment world. This particular report is a semi-annual peek behind the curtain, showing us what happened with their various funds from the 1st of October 2025 to the 31st of March 2026. Remember, these are investment companies, meaning they pool money from a lot of people to invest in things like stocks and bonds. Let's dive into the numbers for some of these funds, starting with the VIRTUS Car Capital Growth Fund. For a hypothetical $10,000 investment in class, a shares the cost over these 6 months was $56, which comes out to about 1.21%. Now that might not sound like a lot, but over time these small costs can really add up. This fund has over $567 million in assets under management. They hold 31 different investments in their portfolio and their turnover rate is 19%. Turnover rate is basically how often they buy and sell investments. This tells us they are not trading super aggressively. Looking at where their money is invested, 40% is in information technology. Communication services makes up 15% and consumer discretionary is 13%. The rest is spread across financials, healthcare and industrials. This shows a strong leaning towards tech companies. Now let's look at the VIRTUS Car Equity Income Fund class of shares. For that same $10,000 investment, the cost here was $59 or 1.17%. This fund is a bit larger with over $161 million in assets and holds 39 different investments. Their turnover rate is quite low at 9%, suggesting a more buy and hold strategy. Their asset allocation is more spread out with 17% in industrial, 16% in information technology, and 16% in financials. Healthcare takes up 10% with consumer staples and utilities, both at 9%. They also have 17% categorized as other, which includes things like securities, lending, collateral. This more diversified approach can sometimes lead to steadier returns. A notable change here is that starting the 1st of January 2026, an expense limitation of 1.14% went into effect for class of shares. This is good news for shareholders as it limits how much they pay in fees. Moving on to the VIRTUS Car Midcap Core Fund class, a shares the cost for a $10,000 investment was $58 or 1.20%. This is a much bigger fund with nearly $2 billion in assets and 30 holdings. Their turnover is low at 9%. Their strategy is heavily focused on industrials at 48%. Financials make up 20% and information technology is 13%. Healthcare is 10% and consumer discretionary is 9%. This concentration in industrials is a key characteristic to watch. Let's check out the VIRTUS Car Small Cap Core Fund class of shares. The cost here is $65 or 1.30% on a $10,000 investment. This fund is also substantial with over $1.7 billion in assets and 27 holdings. Their turnover rate is very low at 7%. The asset allocation shows industrials at 48% and financials at 25%. Consumer discretionary is 15%, followed by materials at 6%. Healthcare is 3% and information technology is just 1%. They also hold 2% in short-term investments. The heavy weighting in industrials and financials here is something to keep in mind. Now for the VIRTUS Car Small Cap Growth Fund class, a shares the cost is $67 or 1.46%. This fund has over $822 million in assets and holds 27 investments. Their turnover rate is higher at 26%, indicating they are more active in trading. Their focus is on financials at 30%, then industrials at 27%, consumer discretionary is 19%, and healthcare is 11%. Information technology is 8%, and consumer staples is 5%. This looks like a growth-oriented strategy favoring companies in financials and industrials. Looking at the VIRTUS Car Small Cap Value Fund class, a shares the cost is $61 or 1.23%. This fund has over $600 million in assets and 29 holdings. Their turnover rate is quite low at 6%. Industrials dominate at 43%, followed by financials at 27%. Consumer discretionary is 12%, with consumer staples at 6%. Materials are 4% and healthcare is 4%. Real estate is 3%. This fund seems geared towards more established companies in value-oriented sectors. Let's move to the VIRTUS Car Small Mid Cap Core Fund class, a shares. The cost is $59 or 1.25%. This is another large fund with over $1.4 billion in assets and 31 holdings. Their turnover rate is very low at 5%. Industrials are the biggest holding at 32%, then financials at 21%, consumer discretionary is 20%, and information technology is 18%. Healthcare is 6% and consumer staples is 3%. For the VIRTUS Small Mid Cap Growth Fund class, a shares the cost is $58 or 1.26%. This fund is smaller with about $5.7 million in assets and 28 holdings. Their turnover rate is higher at 27%. Industrials take up 34%, healthcare is 22%, and information technology is 14%. Financials are 13%, and consumer discretionary is 10%. Communication services and consumer staples make up the rest. This is a growth-focused fund with a significant allocation to industrials and healthcare. Now, the VIRTUS Small Mid Cap Value Fund class, a shares cost $57 or 1.17%. This fund also has about $5.8 million in assets and 31 holdings. Their turnover rate is low at 6%. Industrials are the largest sector at 43%, followed by financials at 21%. Consumer discretionary is 11%, consumer staples is 8%, materials are 6%, and healthcare is 5%. Real estate is 3%. This fund targets value within a blend of sectors. Let's look at the VIRTUS Global Growth Fund class of shares. The cost is $59 or 1.26% for our $10,000 investment. This fund has over $152 million in assets and 32 holdings. Their turnover rate is 15%. Information technology is the biggest sector at 34%. Financials are 21%, consumer discretionary is 15%, and communication services is 14%. Industrials are 9% and healthcare is 7%. It is a growth fund with a significant tech focus. Finally, we have the VIRTUS Tactical Allocation Fund class of shares. The cost here is just $48 or 0.99%. This fund is quite large with over $547 million in assets but holds a lot 385 investments. Their turnover rate is 16%. This fund is surprisingly diverse. Common stocks make up 60%, which includes information technology, 15%, industrials 14%, and financials 10%. Corporate bonds and notes are 12%, and affiliated mutual funds are 14%. They also have mortgage-backed securities and US government securities. This tactical fund is clearly designed to be flexible. Now let's get into the nitty-gritty with the actual financial statements, starting with the statements of assets and liabilities. We see the CAR Capital Growth Fund has about $567 million in net assets. The CAR Equity Income Fund has around $161 million. The CAR Mid Capcore Fund is a giant with nearly $2 billion in net assets, while class of shares alone for that fund are over $133 million. Looking at the statements of operations for the 6 months ending the 31st of March 2026, we see how these funds are earning and spending money. For example, the CAR Capital Growth Fund had a net investment loss of $1.5 million. This means expenses were higher than income from investments. However, they also had significant realized and unrealized gains of over $70 million from investments, totaling a net increase in assets of over $90 million. The CAR Small Cap Core Fund actually had a net investment income of over $6.9 million for that same period. This is a good sign showing they made more from dividends and interest than they spent on expenses. Looking at the historical data for CAR Capital Growth Fund class, a shares, we see a net asset value of $17.27 at the end of the period. For the year ended the 30th of September 2025, that same share class had a net asset value of $21.53. That is a drop of about 15%. Keep in mind though, that is just the price changing. There is also the total return which factors in distributions. For that same CAR Capital Growth Fund class, a shares the total return for the period was negative 13.64%. This means if you invested $100, you would have lost about $136. Comparing that to the previous year that saw a positive 11.28% return, it shows how much markets can fluctuate. The expense ratio is super important because it directly impacts your returns. For the CAR Capital Growth Fund class, a shares the net expense ratio is 1.21%. This means for every $100 you have invested, about $1.21 goes towards expenses each year. Now for VIRTUS Equity Income Fund Class C, shares the net asset value at the end of the period was $18.23. The total return for the 6-month period was 2.48%. This is where you see the difference in share classes. Despite having a higher expense ratio of 2.03% Class C, shares still managed to deliver a positive return. Let's pivot to the VIRTUS Small Mid Cap Growth Fund class of shares. Their net asset value is $33.74. The total return for the period was negative 17.69%. This is a significant drop. Their expense ratio is 1.33%, which is higher than some other class of shares we've seen, showing that growth strategies can sometimes come with higher costs. The VIRTUS Tactical Allocation Fund class of shares ended the period at $9.06. Their total return was negative 7.23%. What is interesting here is their expense ratio is quite low at 0.99%. This fund is more diversified, so when the market is volatile, it might not see the extreme swings of some of the more concentrated funds. One thing that stands out across these filings is the clear difference in cost between different share classes. Class A shares generally have a sales charge when you buy them, but lower yearly fees. Class C shares have a deferred sales charge if you sell early but higher yearly fees. Class A shares are usually for big institutional investors and have the lowest fees. Class R6 shares are designed for retirement plans, also with a focus on low costs. You can see this pattern clearly in the expense ratios. For the Car Capital Growth Fund class of shares, it is 1.21%. Class C shares push up to 2.03%, but Class I shares are a much friendlier 0.99%. This is a really important detail for anyone investing because over many years these expense differences can add up to a huge amount of money. The report also mentions the investment advisor VIRTUS, investment advisors LLC, or VIA, they manage these funds and hire sub-advisors. The fees paid to VIA are based on a percentage of the assets managed. Importantly, the report details that sub-advisors are paid by VIA out of its advisory fees, which means the funds themselves aren't paying extra fees for the sub-advisors. This is a common structure to streamline costs. The Board of Trustees also reviewed and approved the advisory and sub-advisory agreements, and they considered performance reports from a third party called Broadridge. For the VIRTUS Car Capital Growth Fund, they noted it underperformed its peers and benchmark for most periods, but did better in the recent quarter. For the VIRTUS Car Equity Income Fund, performance was mixed, sometimes beating peers, sometimes not. The board seems to be actively monitoring these performance metrics even when they are not stellar. They really dug into the management fees and total expenses. They compared these to a peer group and ranked them by quintile. For instance, the Car Capital Growth Fund's net expenses were in the 4th quintile, meaning they were on the higher side. However, they also noted that expense limitations were in place to cap these costs. This shows a commitment to managing expenses for shareholders. Overall, this filing shows a complex landscape of investment funds, each with its own strategy, share classes, and performance. The financials reveal the costs associated with investing, and the asset allocations give us a snapshot of where the money is going. The board's review of performance and fees indicates a deliberate process in managing these funds. The key takeaway is that while the performance varies across funds and time, the costs associated with each share class are a significant factor and something investors should always pay close attention to. The Tactical Allocation Fund's diverse holdings and lower costs make it stand out as a potentially more stable option. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this valuable, please like and subscribe.